The dollar gaining significant ground against a basket of major currencies. Also quite important to note that it hits above parity when it came to the Australian dollar on Friday. So quite a massive move when it comes to the greenback.
Hi, Eleni. Yeah, what we saw is the dollar initially weakening on Mr. Bernanke's comments that they're about to add more liquidity into the system, a sort of second round of quantitative easing. That took the Aussie past 1 to the dollar. The euro rose up to about 140, 160. The rand benefited quickly on that. But what we saw subsequent to that rather quickly is that the US bond market sold off, which was quite surprising given the fact that Mr. Bernanke did confirm quantitative easing. And I guess it really points to the fact how crowded that trade actually is. The whole world sitting long of US bonds waiting for that quantitative easing and the related plays on the back of that, long emerging markets looking for yield. And when those bonds sold off, everything sort of corrected, and we've seen the subsequent action as far as the dollar is concerned.
Well, David, many are still expecting a lot of volatility when it comes to the greenback, and just some of the reports that we have been reading, we keep seeing that the second round of quantitative easing has largely been priced in. What are investors betting against at this point in time? I mean, the dollar now on the front foot, so quite a massive reversal from Friday.
I think quantitative easing is fait accompli, Eleni. What we don't know is the extent of that liquidity input. There's rumors from anything from $500 billion all the way up to $1.5 trillion, and the effect that's going to have on the market. What we do know is it's coming. We do know that the Fed is very keen to keep longer interest rates down, to try to spur on lending, to create new ventures, new projects as such, to try and create some employment. But we don't know the extent of it. So really the market sold off just a bit of buy on the rumor, sell on the fact. We still know that rates are going to be lower for longer. So I think this is a bit of a healthy correction, but it may last a little bit longer than what a lot of people are pricing in at the moment.
Well, looking at the overall global economy, you've got a second round of quantitative easing coming to the fore in the US. In Europe, austerity is still the name of the game. We're hearing a lot of concerns about a double dip scenario filtering through in the UK. While all of this is happening, we know that equity markets have been faring quite well. Do you think that it's fundamental factors that are driving equity markets right now, or do you think it's mostly speculation?
Yeah, I can't see that as fundamental factors driving equity markets in my mind, and I'm not an equity specialist by a long shot, but in my mind equities are certainly overvalued. One of the reasons is this absolute wall of money that is being thrown at the market to try and correct the imbalances in the system. The problem being, however, is that equities at some point have to justify their valuations. They have to come through with the earnings in order to pay the dividend yields that are looking rather attractive now compared to the bond market. So we have seen a very bullish equity market. I think things are not looking as rosy as the equity market would project, and I wouldn't be surprised to see quite a substantial pullback in the equity markets in the not too distant future if we don't see some positive growth signals coming through from the global economy.
Well, it's interesting, Dave. I mean, when you see some of these third quarter earnings that have come through from the US, pretty much a mixed bag at this point in time. Everyone's going to be focusing on Citigroup, set to release later on. But we know that Google rallied around 11% on Friday on the back of good results. Intel also pretty much had a good run, and they're all citing emerging market spend as one of the key elements to the better earnings environment that has come through in the US.
Well, and that's why we've seen emerging market currencies do so well, because those economies are on the front foot, but still very much reliant on global developments. If the US and the UK and Europe, in fact, head into a double dip scenario, then that emerging market, that rosy picture that exists at the moment as far as emerging markets are concerned, dissipates quite quickly. I think the key here is for us to watch what happens in the coming months to US unemployment, to non-farm payrolls or to payrolls in general, and how that's going to drive sentiment going forward. I think equity markets look a little bit expensive and in fact may pose a risk as far as emerging market currencies are concerned.
Well, just looking at emerging market currencies as a whole, as you mentioned, and as we've been talking about for the last few weeks, strong flows into our currency, and that seems that it's going to be the name of the game. We keep hearing about whether it's going to have a significant impact on South Africa's growth. What is your view on this, Dave? Some are pretty much divided on this. We know it's adding pressure to our exports.
Well, I think as the finance minister said last week, and various others members of authority said last week, there's no doubt that the rand is on a sort of macro pricing power view, that the rand is certainly overvalued. But then again, so are most of the emerging market currencies across the world. I guess there's a lot to say what China is going to do. Do they allow the yuan to strengthen a lot further from here? And then, of course, these valuations don't look as extraordinary as they do at this point in time. So there's a lot of noise. I think certainly the strong rand is now beginning to have a big impact on our exports, on our manufacturing, on our ability to create jobs. But I think there's also a realization there's not a lot you can do about it as far as domestic policy is concerned. This is going to have to be a global reaction to what is clearly a global problem. Otherwise, I think we're just going to have to go with the flow and as far as global sentiment is concerned.
676 hits on Friday, fresh 33-month peak. David, where are you pegging the rand at the end of this week?
I think we can still see a further correction to the weaker side, Eleni. I think 695 is certainly doable in the not too distant future. I think equity markets are very nervous. I think there will be some money taken off the table, but I do think that that's a correction. Perhaps we may track as high as 7 to the dollar. But once that quantitative easing is quantified, in fact, and the extent of it, then we may see US bond yields dip lower, and then we'll see a resumption of the flow into emerging markets.